Hello students, last video we have seen how to make journal entries. This was our first video based on problems of financial accounting. In today's video we are going to see what is ledger accounts. So before going ahead, let's quickly understand what is a ledger. Let's quickly understand what is a ledger account. A ledger is a book or computer file used in accounting to record and total economic transactions measured in terms of a monetary unit for each account by account type, with debits and credits in separate columns and beginning a monetary balance and ending monetary balance for each account. So basically, what is a ledger? A ledger is known as a general ledger and it is a comprehensive record that includes all the accounts used by a business. We have seen three types of accounts. So all three types of accounts are covered here. These accounts are categorized into three main types, that is personal accounts, real accounts and nominal accounts as discussed in the previous video. So each type of account serves a different purpose in accounting and helps in organizing financial information systematically. That's why all the types of all three accounts are required here in ledger. Now, what is the importance of ledger accounts? That is, it is a comprehensive record, it is a complete record. Ledger accounts are used for financial analysis. They are used for account reconciliation purpose, for audit purpose and for financial purpose. Now let's quickly understand what is the format of ledger account. In the ledger account, you have debit on your left hand side and credit on the right hand side. In debit, you have four columns. First is date, then particulars, then this JF. The JF means journal folio number and the amount. And similar four columns in the credit side, that is date, particulars, journal folio number and the amount. So date, basically it records the transaction date. Particulars briefly describes the nature of the transaction. Journal folio is optional, many times it is optional, and it refers to the journal entry number for the tracking purpose. So if you have huge number of records in your journal account, then generally this journal folio number is required, and the amount, it records the monetary value of the transaction. Now let's go through the first problem based on ledger account. Example 1. Enter the following transactions in the journal and post them into the ledger. So first of all, out of given this transaction, we have to create the journal account. For the given transaction, let's quickly prepare journal entries first. So example, enter the following transactions in the journal and post them into ledger. So this is for 2017 Jan 1, Mr. Sandeep. So these are the journal entries for Mr. Sandeep. Now on January 1st, Mr. Sandeep, I hope it's visible. On January 1st, Mr. Sandeep started a business with cash for rupees 1 lakh. So on January 1st, cash account is now debited for 1 lakh to capital account credited for 1 lakh. Now on January 2, for the second transaction, he purchased a furniture for rupees 20,000. So furniture account will be debited for 20,000 and this amount he has purchased from cash. So for cash account is credited for 20,000. Now on January 3, he has purchased goods for rupees 60,000. On January 3, he has purchased goods for 60,000. So purchase account will be debited by rupees 60,000 and cash account will be credited by 60,000. Now on January 5, he sold goods for cash rupees 80,000. He sold goods for cash rupees 80,000. So cash account will be debited and sales account will be credited by 80,000. On January 6, he just paid the salaries of rupees 10,000. So salary account will be debited and cash account will be credited. So we are done with our journal entries. So there are in all 5 journal entries. Now we have to create ledger accounts for each of this journal entry. We have just created journal entries. Now let's quickly create a ledger account for each of the accounts. The first is cash account. For your understanding, I will highlight this debit side with green color as of now and the credit side with pink color. Now let's quickly understand which all accounts are there. So we will create formats first of all those accounts. So let's say the first entry is for cash account. So for ledger account, the first account is cash account. So debit side we have 3 columns, date, particulars, amount, and for credit side we have 3 columns, that is date, particular and amount. Now what is our second account we have to create? It must be the capital account. So let's say I will just copy paste the same format for this capital account. We will quickly create formats for all those accounts first. So capital account, I will just copy paste this format for the capital account. Then our third account should be furniture account. So let's say again we will make the same format for furniture account. You can follow the same approach, that which all accounts are there you can create basic accounting tables with, let's say, 3 to 4 lines for all those accounts. Then once you're done with furniture account, then we have the purchase account. So that you will not forget any of the account. So we are done with purchase account. Then we have purchase cash sales account and salary account. So this is for the sales account, and along with that the last ledger account should be our salary account. Now we will make entries for each of the account. So let's say on Jan 1, 2017, what is the first entry? That is cash account was debited and capital account is credited for 1 lakh rupees. So I will come to this first entry, that is Jan 1, cash account is debited. So I will write this 1 lakh amount in my debit side, but this cash account of mine is, this cash is utilized for which purpose? That is, it was utilized for the capital. So that's why to capital account 1 lakh cash was utilized. In this capital account we have got cash from of rupees 1 lakh. So capital account is to be credited for 1 lakh rupees. So this capital account, now this is by cash. So capital account is to be credited with 1 lakh of rupees. So we are done with our first entry, and we also need to write the date in both the columns. So we have done with dates also. So we are done with now first entry. Now on 2nd of Jan, what is the transaction? That is on 2nd of Jan, furniture account is debited for 20,000 by cash, which is credited 20,000. So I will go to now furniture account, that is my furniture account is debited. So this furniture account is debited now by which one? That is cash. So by cash account. And how much is the amount? That is 20,000. At the same time, This cash is to be credited for furniture account by rupees 20,000. So on January 3, we have purchase account and cash account entry. So purchase account is debited and cash account is credited. So purchase account first of all debited and cash account is credited. So what is the amount now? So this is purchase account debited by 60,000. So purchase account credit side now 60,000 and this transaction is happened via cash. So to cash 60,000 rupees. Now the next entry on January 5 is cash account debited 80,000 to sales credited 80,000. So now cash account is to be debited. So first of all we will write to sales account. How much is the amount? That is 80,000 and this sales account is now debited. This cash account is now credited by 80,000 and sales account is debited to cash by rupees 80,000. So on January 5 to cash 80,000. It is by cash 80,000 rupees credited. And the last entry is on January 6, he has paid salaries from cash rupees 10,000. So salaries account is to be debited by cash and here this cash is spent for salaries. So by salaries 10,000 rupees. So all this let's quickly understand. So debit account, for cash account we have on January 1 one entry, that is to capital account 1 lakh, and on January 5 to sales account 80,000. Then on credit side we have spent by furniture 20,000, then by purchase 60,000 and by salaries is 10,000. So now how much is the subtotal here? So subtotal is rupees 1,80,000. And here if you observe what is the subtotal, that is just 90,000. So what is the difference? That is 1,80,000 minus 90,000. So how much cash you have to be, so at the end of the month how much cash you have, that is on January 31, how much cash you have to carry it down is 90,000, which is the difference between 1,80,000 and the subtotal which was 90,000. So now we have got debit side 1,80,000 and credit side 1,80,000, which is balance. So each of the ledger account you have to balance. Now in the capital account we just have one entry, that is by cash 1 lakh rupees in the credit side. So in order to balance this account, what we need to do is on January 21 to balance carried down 1 lakh of rupees, and then the sum is balanced in both debit and credit side. We'll just delete the extra entries. So you just have to write the total here and total here also. Now let's say in case of furniture account, we just have one entry, that is furniture account is debited to rupees 20,000 to cash. So we will balance this entry on January 31, that is by balance carried down rupees 20,000 and then total. So again furniture account is balanced. So in this way you have to balance all the accounts. So this one is to cash. So here also, so here now balance carried down will be 30,000. So balance carried down will be 60,000. So now this purchase account is also balanced. Now for the sales account, we have got this by cash 80,000. So on January 31, we will have to balance carried down 80,000. So this sales account is also balanced now. And the last account is to cash salary account 10,000. So this cash account will be balanced now by cash. We have created all the ledger accounts. So cash account for the transaction of rupees 1,80,000, for the capital account for the transaction of 1 lakh, for the furniture account transaction worth rupees 20,000, for the purchase account transactions worth rupees 60,000, sales account transaction worth rupees 80,000, and salaries account worth transactions worth rupees 10,000. So this is how we have created all the ledger accounts from your journal account. So this is your complete solution of this example number 1. So you have to create journal entries and as well as post them into ledger accounts. So one journal account here and 1, 2, 3, 4, 5 and 6 ledger accounts you have to create for this particular question. I hope you have understood how to create ledger accounts from the journal entries. If you have any doubt, let me know in the comment box. We'll be happy to help you. Let's go to example number 2. Journalize the following transactions, post them in the ledger and balance the accounts on 31st of Jan 1st, Shrikant started a business with capital rupees 10,000. Jan 2nd, he purchased goods from Mohan on credit worth rupees 2,000. Jan 3rd, he paid cash to Mohan rupees 1,000. Jan 4th, he sold goods to Suresh rupees 2,000. Jan 5th, he received cash from Suresh rupees 3,000. Jan 6th, he further purchased goods from Mohan rupees 2,000. Jan 7th, he paid cash to Mohan rupees 1,000. Jan 8th, he further sold goods to Suresh rupees 2,000. And Jan 9th, he received cash from Suresh rupees 1,000. So first we will create journal account for these entries. I have already created the format of the journal here. Now let's say the first transaction, that is Jan 1st. So we'll just put the date. On Jan 1st, Shrikant started a business with capital rupees 10,000. Shrikant started a business with capital rupees 10,000. So cash account will be debited for 10,000 and capital account will be credited for 10,000. On Jan 1st, cash account is debited 10,000 to capital account credited 10,000. Now on Jan 2, he purchased goods from Mohan on credit worth rupees 2,000. Now on Jan 2, he purchased goods from Mohan on credit worth rupees 2,000. So initially this is a purchase transaction. So purchase account is debited for rupees 2,000 and this amount he has to return to Mohan. So to Mohan account credited 2,000. Then on Jan 3 he paid cash to Mohan rupees 1,000. So Mohan account will be debited to 1,000 and cash account will be credited to 1,000 because he has paid cash to Mohan. Now on Jan 4th he sold goods to Suresh 2,000. So here it is a sales transaction and he sold goods to Suresh. That's why Suresh account will be debited worth rupees 2,000 and sales account will be credited worth rupees 2,000. Next transaction on Jan 5th he received cash from Suresh rupees 3,000. So cash account will be debited for rupees 3,000 and this cash is being paid by Suresh. So we will credit Suresh account by 3,000. Then on Jan 6, now on Jan 6 he further purchased goods from Mohan rupees 2,000. So purchase account will be debited worth rupees 2,000 and he has purchased these goods from Mohan. So Mohan account will be credited by 2,000. Then on Jan 7 he paid cash to Mohan rupees 1,000. So Mohan account will be debited and cash account will be credited by 1,000. Then on Jan 8 he further sold goods to Suresh rupees 2,000. So once again Suresh account is debited and sales account is credited. This is exact similar transaction to January 4th. And then on Jan 9 he received a cash from Suresh rupees 1,000. So this cash account is debited and Suresh account is credited. So here we have done with journal entries for this example. Now we will create ledger accounts. So now we will create ledger accounts. Now in this example we need to create ledger accounts for cash, capital, purchase, Mohan, Suresh and sales account. So let's say first entry, that is on Jan 1st, we have cash account debited to capital account. So in debit side I will make this entry to capital account 10,000, as well as now in this capital account I will have this transaction, that is cash by cash. So by cash account 10,000. Now on Jan 2nd purchase account is debited to Mohan's account. So on Jan 2, I will have this purchase account debited to Mohan. So to Mohan account for rupees 2000, as well as I will also have to make this entry in Mohan account for purchase, that is by purchase account worth rupees 2000. Then on Jan 3, Mohan account is debited 1000 and cash account is credited 1000. So on Jan 3, this Mohan account is debited to cash rupees 1000, as well as I will have to make this entry in my cash ledger also, that is on Jan 3 by Mohan on credit side 1000. So this is by Mohan account. How much is this? 1000 rupees. Then on Jan 4, Suresh account is debited 2000 rupees to sales account credited 2000 rupees. So on Jan 4, Suresh account is debited to sales account. How much? For 2000. We'll have to make the respective entry in sales account. So sales account will be credited by Suresh on Jan 4. So by Suresh account, and how much is the amount? That is 2000 rupees. Then on Jan 5, cash account is debited 3000 to Suresh account 3000. So cash account debited on Jan 5 by how much amount? Rupees 3000. And now Suresh account has to be credited to cash by 3000. This is Jan 5. So by cash account rupees 3000. Now on Jan 6, purchase account debited to Mohan account credited. So purchase account debited on Jan 6. On Jan 6, purchase account. So Mohan has paid, that's why to Mohan account again 2000 rupees, and now this Mohan account has to be credited on Jan 6 by purchase, that is 2000 rupees. Then on Jan 7, Mohan account is debited to cash account rupees 1000. So Mohan account on Jan 7, that is to cash, how much? Again 1000 rupees, and this cash is being paid by Mohan. So in your cash account, we will have Jan 7. So this by Mohan account, again 1000 rupees. Now on Jan 8, Suresh account is debited to sales account for rupees 2000. Suresh account Jan 8 to sales account, again rupees 2000. So same transaction, and Suresh account is debited to sales account. So I will have to make the entry in my sales account also, that is Jan 8 by Suresh account credited 2000 rupees. And then the last entry is on Jan 9, cash account debited to Suresh account 1000. So on Jan 9, I will have to Suresh 1000, and in Suresh account I will have this entry on Jan 8, that is by cash rupees 1000. So now we have in cash account these three transactions on debit side, Jan 1, 5 and 9, and on credit side we have Jan 3 and 7. Now in capital account we just have one transaction, that is by cash on Jan 1. Then in purchase account we have two entries, Jan 2 and Jan 6. Then for Mohan account we have two entries on debit side, Jan 3 and 7, and on credit side we have again two entries, Jan 2 and 6. In Suresh account we have two entries in debit side, Jan 4 and 8, and credit side Jan 5 and 8. And in sales account we just have two entries on credit side, Jan 4 and 8. Now we will balance all these accounts. Jan 31 I will have this by balance carried down 12,000. So I have this 40,000 debit side, 14,000 credit side. Now in my capital account on Jan 31, we'll have to close this to balance for rupees 10,000. So our capital account will also be balanced. Then in our purchase account by balance it should be 4,000. Now in case of Mohan account by January 31 it should be 2000, so that it would be 4000 in debit and credit side. Now in case of Suresh account we don't need to balance. I will just delete the extra rows. And in case of sales account to balance it should be 4000. Here also I will delete my extra rows. Okay, so now we have created ledger accounts for cash as well as capital, then purchase, then Mohan account, then we also have Suresh account, and then sales account. I hope you have understood how to create ledger accounts. If you have any difficulty, let me know in the comment box. In our next video, we will understand the concept of trial balance.